The stock market is getting smashed. You are seeing the sentiment really turning down right now. Everybody's worried. Is the Federal Reserve going to rain on this parade? People don't know what to expect. Why? Because of everything that has happened up until this point being one very, very specific direction, and that is up. And now suddenly they're saying, wait a second, is the Federal Reserve really going to do what they say they're going to do? Well, we will only find out in time. That's what today's video is about. I want to make it very quick. What I'm showing you right here is a video that I made back in January of 2019. I think it's best to actually watch the video. It's 1 minute long. It is 60 seconds long. In the video that we'll post after this one, I talk a little bit more in depth about it, but essentially just saying that when the Federal Reserve prints more money and the other central banks print more money, the stock market can go higher. If the Federal Reserve and other central banks reduce the amount of money that they're printing, stocks can go lower. They do not necessarily have to print money and directly buy the stocks for that to happen. They simply create the conditions to do so. That's the way this works. You got easy money. Money is sloshing around every direction, and the Federal Reserve and other central banks make that happen. They can turn on or off the tap. But the average retail investor isn't aware of this. They don't realize this. To some degree, they do because Bloomberg articles and CNBC articles are mentioning it. But to the degree at which its level of importance is right there and up front, I don't think that's understood by the average investor. And that's the key. So pay attention very carefully to this right here. The meeting of the Federal Reserve, January 25th to 26th. This is so key. Up until then, there's going to be serious volatility, and we've seen that volatility, no doubt. Right now, as I record this, it's the 23rd. We got to wait a few days. And then, of course, as always, 2 p.m. on the 26th, we are going to get the statement. It's going to highlight what you have expected. But at 2:30, there's going to be the conference, and the reporters ask some questions, and largely it's going to be what you expect. But there's always one little piece here and there that tells more than all of that other data that's just a waste of time, and I sit through them and I actually tell people what happens in them. I suffer through it for you. And my goodness, I fall asleep sometimes. It's terrible, real dry. But we get that little piece of data, and that's what changes things sometimes. And so we got to be aware of that. It's the 26th. Pay close attention. I will have videos on it. I will be posting all about that. What you can look at in the market right now is extreme fear. And we see this in the different fear indexes and so on. But look at the price action as well as the indicators themselves. This right here where I have highlighted is the NASDAQ. And that is a good barometer in one respect because it's growth stocks. And growth stocks are usually going to exaggerate to both the top and the bottom. Even more so is the Russell or the small caps that's on the right hand side, and it has been beaten down brutally. We could see the exaggeration here starting from exactly where the other markets had been, and that is early November, and I've been talking about this all along. You could see that it has moved in a direction in which people didn't really expect this coming at a time of, hey, when the markets are at all-time highs, it has to go higher, right? And you saw the alternative media. I don't want to really want to call them alternative media, but you see the typical, I don't know what you want to call them anyway, typical people that others will listen to, other retail investors will listen to, and my goodness, it's just been very, very poor advice to say the least, and they shouldn't be giving advice anyway. But now we're seeing this, I would say, oversold conditions that are occurring on many different indicators. You look at the RSI, just take a look. We haven't seen this level down here. If you could see where my mouse is going, we haven't seen that level since March 2020. And a lot has shown up around this territory of, hey, this is going back to the March 2020 levels. So extreme fear, extreme worry, but not extreme sell-off. I mean, it is just, we're not there yet, okay, to say the least. You look at some of the very risky markets like Bitcoin, and I call it risky, not necessarily like in a negative context. I say because it's a risk asset. Okay, equities, risk asset. Bitcoin, cryptos, risk asset. Okay, just the way that it is. It doesn't mean that it can't perform well or what have you. It's just the terminology. Anyway, but you can see what has happened. I mean, it was at 68,000, around that range, and has basically been falling. And we've seen lower lows, down, 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 down. And that has not been a good thing. Okay. It's just been really struggling. But during what time? Again, in this case here, it exposed itself back in late October. And then what happened? Okay, it has another surge up here. Early November. It's correlated to what we're seeing in the stock market, primarily with the NASDAQ and the Russell. Do you see the correlation of risk? Risk on, risk off. I'm trying to highlight that not just with the news and not just with different indicators that come out, economic indicators, but I'm trying to show you that with the price action as well, with the different indicators. There's all different kinds. And I'm trying to bring that all together, trying to wrap it together for you, just to make you aware of what's happening on a deeper level. What you want to do with your portfolio, what you want to do with your own circumstance, that's up to you. I'm not here to tell you what to do. I hope you wouldn't be able to follow what I do because I don't share what I personally do. But I think it's important that people be prepared. I think actually this week, if the Jerome Powell and the Fed kind of back off of what they had been saying, I think the markets could actually pop up higher because they say, hey, things aren't so bad and we have some time until March where they would increase rates. So, let's buy in at this point. Things are low. So I think that actually could happen. So we'll see. That's all for today. I'm going to bring you this data as much as I possibly can. So stay tuned, hit that thumbs up button because doing so will actually make you more likely to see these videos in the future. Take care.